Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to go with you guys through yesterday's price action on AMC. We are having 2 consecutive green days to finish the week, which is quite positive to me. And there are other signals as well that give me some information about what might happen next. So let's get into it. So I am on the forward time frame once again. As always, guys, we take a step back just to admire this price action. All right, so we were at less than 1 year ago, all right, and we did one leg, second leg, third leg up, fourth leg down. We are in this leg down, and there is a leg up coming, I believe. So now let's zoom in here a little bit. For those who have watched my previous video, those are still my signals that are valid. So I want to stress this one. I want to point this one very clearly, guys, this bullish divergence. All right, so what I can tell you about divergences. So maybe for those who don't really know what it is. All right, so you have different types of divergence very quickly. This one is to me the easiest to use, and this is the one we are having. So basically we are in the bullish situation. The market is making lower highs with the momentum starting to go up. So I want to quickly comment on those divergences. First, what I like to do, I like to have at least 2 of them on different time frames to consider the signal is valid. All right, so this is a method that I invented, that I apply to myself, that is working, is efficient for me. But be careful with those divergences. All right, that's what I'm saying. So here you can see that on the forward time frame we have it. On the daily time frame we don't have it though, because here the momentum is going lower, as you can see. And on the hourly time frame we have it here. Okay, so we have it on the hourly time frame. Bam. Here you can see that the momentum from this low here at minus 2.5 to this low here is going higher. So it's true on the hourly and the forwards. Why I am checking those? I'm always checking the hourly, the forwards, and the daily. What I don't like to have is too many waves here. So here we have 1, 2, 3, 4 waves. It's acceptable. 5, 6 waves is not acceptable. So then if I have too many waves between the lows, I would not consider this as a valid signal for my divergence. So here I have the divergence on 2 different time frames, the 1 hour and the 4 hours. All right. And this is going to impact the price action for roughly this time. Okay. So what does it mean? It just means that here bears lost a battle, and they're going to remember it roughly during this time. Sorry. Bam. Here they lost the battle because they had a breakout. Okay. Let me explain very quickly again what a divergence means, guys. Here, okay, we broke out below 31. I remind you guys. All right. We broke down here. So the bears were in control, but they didn't manage to bring the momentum back to a lower low so that they have the momentum with them. So they have the breakout, but they're not able to get the momentum with them. What does it mean? It means they are weak. So, and they lost the battle here. They got trapped. It was a bear trap. So a lot of sellers got trapped here, and the effect is gonna stay in the mind for roughly the period between here and here, because the breakout is coming from here. I remind you guys. All right, this is how I invented this rule, and I apply it to myself, and it's giving me good results. But what I like to do is to trade. A divergence is for me not enough. It's just an indication. So what I like to do is to associate those divergences with breakouts, and I am waiting for the breakout just here, guys. So this is the bear camp, like I said in my previous video, that is gonna slide down if we stay here. So what we can see here, so on the hourly time frame, it's not clean. Let me go on the 4 hours. What we can see here, guys, bam, bam, I put back my divergence. I connect the high here, the high here. We can see that here we had a reaction, a selling pressure that arrived just after the earnings, and that got us this bearish engulfing followed by a doji candle. Okay, you can see it clearly on the daily. Bearish engulfing followed by, so here this candle completely eats the previous one, that is the small green one gets eaten by the big red one, and then bear trap again. Many bears were trapped here. So bear trap, bull trap, bear trap. It's very complicated, but on the larger scale the signals are quite clean, rejected on the resistance level, and now we are totally invading the bears camp, which is good. All right, so this is the orange rectangle here. we are just in it. You can see that we had here a reaction yesterday, so Friday, exactly on this trend line. Okay, once again, here we tried to break out. It was too early. Why too early? Because we were coming back from too far. All right, so we arrived there already like tired. All right, after 25% move, we were tired. All right, the bulls didn't have enough ammunition here to destroy this bear camp. So what did we do? We got back to take some fresh ammunition, guys, and we are just coming back to the battlefield again. That is here. So here there is a fight. For now, it's looking quite good to me. I like to see those consolidations just below the breakout area, all right, because the market is gathering strength, and the bears, they are, you know, just sitting at the level, but you know, you can see they're not attacking. Who is attacking? The bulls. The bulls are trying to go through this resistance. So this is what we want to see. If we have this plus the breakout plus the divergence, that is already helping. As you can see, this would look good to me. So this is what we're waiting for. And once again, I need to remind you guys that as long as we are below this on a larger time frame, bears are still in control since June. So it's been 2-3 months. All right. So this is what we want to see. Very quickly, let me show you some cool option strategy. Once again, guys, I'm sharing this on my Discord for all of you guys that are interested. Just click on the link in the description of this video. It's still 25% off until tomorrow. Then I will have no choice but making the prices higher because I don't want too many people there. So last chance for you guys if you want to join this place, and I'm sharing with you this kind of strategy. So to me, this is the best option strategy you can make for the past 2 months. All right, I'm advising to make this strategy since I'm back from Croatia, which is like 1.5 months. So I wouldn't have lost money and I wouldn't have made money either, because I lose money below 24, I make money above 40. We are stuck here. But the good thing is that if there was a strong move up, by having this strategy, you would be in. All right. So this is the important thing. Now we can see that at 34, it's a bit more expensive. So once again, let me remind you this strategy that I really like, guys. Okay, so you sell a put. Why 24 put? Because this is the bull camp. So we are not scared to sell a strike below which we know we won't be going, because you start losing money below 24. I mean, we won't be going at least until the 17th of September. After that, of course, if we go there, we tested, you know, everything can happen. I'm just saying that for now, this is very safe to me. Then buying a 40 strike call. Why 40? Because it was the resistance level. Now it's more like 35, but the 35 strike would be more expensive. So I would still stay on the 100. And you can see that this costs you $360, and you can make it even cheaper by sacrificing the upside performance above 100. All right. So you sell the 100 call, you get back $170. So it costs you a total of $200. All right. So this is the cost of the strategy today. And when I showed this strategy for the first time, it was almost for free. All right. Because AMC was around 31, you know, or 32. Something like this. So this strategy was costing $50. If you take it now, it's a bit more expensive, but it's still, to me, a good play. And if you want to have it cheaper, you just go to the higher strike, all right? You can go to the 50 strike. And now it's free, okay? So it depends on what you want to do, but the next resistance level is 46. Let me show you guys this. So I start to check what happens if we break out. Probably a strong move, especially if we consolidate longer. I give it here maybe 1 or 2 days. So I don't want to give some day analysis because it was very tough. So I'm sticking to the longer time frame analysis. But here I wouldn't be surprised that we hover here a little bit more before breaking out, okay? And if we break out, the next resistance level would be here, guys, okay? 46. Why 46? Because it's the high that I have here. It's also a high that I have here. So I have 2 recent reactions, okay? We can maybe put one here. Okay, 40 my height as, okay, there is 40 first and then 46, okay? But I believe the move would be strong. So from here to here, 25%. 40 might be the first resistance, maybe then slight pullback, and then 46. And then once we're here, guys, it's looking very good. It means that the bears lost the battle and they're going to retreat, and the bulls are going to keep attacking. And the shorts are going to cover. And then, you know, the process, there is a lot of gamma sitting around the 40 strike, and there is a lot of gamma sitting around the 145 strike. which is gonna create some very strong bullish momentum if we start going there. So this might be for me the next move that is gonna play out, maybe this week, maybe next week, I don't know, let's find out. But I think that we are on the right path. So if you guys enjoyed this video, please don't forget to click on the sub, like, and bell button so you're gonna be the first to know when I upload anything new, and stay close to shore. See you guys.